In this video, I'm going to walk you through the strategy that I think that you and I should use together, at least in the initial first 30 days. Now, I'm going to introduce you to some of the other trades as they develop while we're trading together, but I want to walk you through the one that I think is the best. It's the best suited for your situation for many reasons. First of all, I want you to be in a frame of mind of we need to develop confidence, and you obviously by doing that with me and executing these trades when I do, and I'm going to show you how I actually execute these trades. I want you to know, first of all, that not only are you doing it, but so are my other coaching students and other people who have taken and gone through the course. So everybody's doing the same thing, and it works. It truly does work. It's very structured, and I can't guarantee that every trade is going to be a winning trade. Today, all the trades that I'm going to show you today were really good trades. I think we had a total of 180. I actually executed these trades with one of my coaching students today. But I'm going to show you how you can actually make more than just 180 pips in one day. And I can't guarantee that every day you're going to make 180 pips, but by showing up every day, we do get the opportunity like this. When the market provides the opportunity for us, we get these opportunities like this on a regular basis. So again, there are some days when I might just see, one HL30 on the euro dollar and that's it. Some days I do get a bigger opportunity. It just depends on the trading ranges too. But as all this starts to unfold, I explain why I'm anticipating or expecting the results that I'm expecting. In other words, for example, what you're looking at right now is the euro dollar. And with this HL30 strategy, I developed this strategy, and what I was trying to do was look for an opportunity after the rollover period occurred, which is 5 p.m. New York time. That's the industry standard for the start of a new day. And in California, that 5 p.m. rollover is actually 2 o'clock in the afternoon for me. So I was sort of bored. It was still daylight for me, and my family's awake. My children hadn't come home from school and things. So the day's still active. And I would just sit there and look at the charts, and I noticed that price started moving sideways. And I remember trying to research ways of trading during those slow, quiet periods. I was also trading futures in the first year of my trading career, and futures do the same thing. Once the market's closed, they go flat and sideways. And I remember asking a lot of people, I was really new, and I would ask a lot of people in chat rooms and things, is there a strategy for it? And they used to tell me, no, just wait until it becomes more active towards, when a particular market opens. Obviously for futures, if I was trading the E-mini S&P, I've got to wait till the U.S. market comes online. But with currencies, there is some activity during the Asian session, and it does kick price around enough for me to get some signals. So on this particular day, which was the beginning of today, Wednesday, here it's still Wednesday in the United States, this gave me a signal within just a few hours after the rollover period. This dotted line right here is the rollover period. So by watching the charts and looking for an opportunity, I knew, first of all, that I couldn't expect big moves. I mean, it is possible that maybe something could happen in Japan. Maybe a bank official in Japan could make a statement that might affect the market, and then we might see like an 80 pip move in the euro dollar. But for the most part, I had to get my expectations in line. I had to pay attention to the time frame or the time that I was actually trading during the Asian session. So I had to calm down. I was basically looking at the previous day's high and low, and I was trading this on a 30-minute chart. I got better results trading on a 30-minute chart because if I do it on a 1-hour chart, I'm giving up some of the profitability waiting for that 1-hour candle to close. I did test it. I also found that by using a time frame any smaller than the 30-minute chart, it wasn't as predictable. The candles and the patterns, they weren't giving me the right signals, and they just weren't they weren't as profitable. I was getting a lot of false signals before the actual signal, and by switching over to this 30-minute chart, everything was a lot cleaner. And 30-minute chart, with a really quiet overnight trading session, it's a relatively good time frame. It's not too small to create a lot of choppy activity. I'm not scalping. I'm always using the same price target and the same stop loss every single time. So again, that's why I call it the HL30. I'm using the previous day's high and low. Now, there are some rules that you have to be aware of that will help you determine when you should not trade an HL30, even if you get the signal. You have to be really careful about that. I could go on and on. There's 3 basic ways or rules that will determine whether you should pass on an HL30 and that it could potentially fail. So by knowing that, you can also increase and improve the performance that you actually get with it. And then it's just a matter of really focusing in on your behavior, making sure that you're not taking trades that are, um, you know, not too sure, where you're not too sure about it. You don't really have solid confirmation. I consider it, and I refer to it as like an on or off switch. Everything lines up correctly according to the rules, or I just pass on it. And I know sometimes it's hard to do, because sometimes when I pass on a trade and it's not lining up correctly, it doesn't give me full confirmation. Even when I pass on it, I know that sometimes there's still the chance that it will work anyway. But I don't want to trade those, because those are not the right ones. If I do that the next time, it's not going to work. I have to just do what I'm supposed to. And that's what you and I are going to do. That's what I'm there for, is to show you that it works, instill confidence, do it with you for the first 30 days. And then after that 30 days, you and I are continuing to do it, but you'll be doing it in a chat room environment with me and a few other coaching students. And then also where you can get to the point where you know this trading strategy so well, because you know every thought process that goes through my mind as we trade through that 30-day period, that you're also self-correcting, so that if you ever end up doing this by yourself, completely by yourself in the future, you have the ability to understand exactly what you're doing wrong and where you're going wrong on the trades. So when I developed my trading system, it didn't matter if it was the continuation breakout trade or this HL30 or any other trades that I developed. I kept telling myself, as I was piecing these together and I was making my own videos to record my journal, I was telling myself, I want to know why they fail. There's got to be something in the chart technically that I can, if I create enough structure for the strategy, I knew that I could figure out where I was going wrong and then correct the behavior. It's just a mistake on my part. And it made trading a lot easier for me to do that. You read books and they talk about being mechanical and trying to remove your emotions. Well, I'm a pretty emotional guy. I think most people are emotional when it comes to money. And I don't get mad, or I might get a little upset and bothered by some losing trades, but I know that I'm going to get them back. It's certainly not the emotions that I was experiencing before. So it's really hard to remove emotions. So the best thing that I can do is create so much structure with this trading strategy that I just need to pay attention to my behavior. It was my performance that I need to monitor. So again, the reason I'm also sharing this video with you, instead of writing it all out on an email and giving you some links to some videos, I'd rather show you what we did exactly here today and show you the possibilities. And then that way you know exactly what I'm talking about, instead of trying to dissect what I'm saying in an email. So after the rollover period, I'm going to go ahead and go to this and detach the charts here and show you what we did here. So after the rollover period, what I'm doing is, when the rollover period actually occurs, I know that at 5 o'clock, I'm going to be ready to set up my charts. Now, I mentioned that part of the cost of the coaching also includes a lot of the platforms and the programs that I personally use. And some of them are pretty expensive, and I include those instead of having my coaching students go out and have to pay for them on their own. And I had mentioned that I really am not a big fan of MetaTrader. I use MetaTrader because all of my subscribers to certain services that I provide use MetaTrader, so I have to. But I prefer to actually trade FX futures. And that's eventually where I would like to have you go eventually, when you start making more money and you've got more money in your account, to start trading FX futures. You're going to get much more consistency in your execution. There's less manipulation there. It's more regulated. You're actually going to be able to see true volume, contracts traded instead of just tick volume in MetaTrader. And that we can go into a different subject. I don't really talk about it a lot on my website because I don't use it with the MetaTrader platform. You can't use it with the MetaTrader platform. It's just tick volume. Every once in a while, I might make a video where people can see my actual futures trading platform, and then you'll see the volume there in some of those videos. But that's because I'm already working on it. I don't mean to confuse anybody with that information, but just to give you an idea that if you want to start making $3,000, $5,000, $10,000 a month, you build your account to the point where you can make money like that. You don't want to leave things to chance with a MetaTrader broker like that. I highly recommend using and trading FX futures, but I'll work with you on that. I try to turn every coaching student in that direction eventually, and they're really happy with the results. It is a relief when you don't have to worry about the manipulation, and nobody's stopping you from trading the news. If you want to trade the news, you're going to get a good fill. You know why and you know when. So with the rollover period here, all I'm basically doing is preparing my day and knowing exactly where the high and the low is. Now with this chart program that I include with my coaching, It is a system that I actually created, and it's loaded up on this chart program. It's not MetaTrader. It's something. It's a different company, and it will automatically detect when price starts to approach the HL30 levels. Now, if 5 p.m. New York time is, I'm calculating that 5 p.m. New York time will be approximately midnight for you, 12 a.m. So if you're asleep, the program will automatically detect the previous day's high and low. And then if you've followed along with some of the videos, I'm looking for price to approach the previous day's high or low within a 10 pip range. So say, for example, with this high up here, we've got 90 as a high. So price has to come up to at least 80 to qualify for an HL30. And then for the low, I've got a low down here at 30. So price needs to come down to at least 40. And that is right here. So you notice that in the first couple of candles, at the start of the new day, it already hit and went within the 40. It reached 40. So it already qualified step one for the HL30. Sometimes it doesn't work like this. I mean, sometimes it's going to close in the middle of this overall trading range, and I have to wait until the New York trading session to actually get an HL30 signal, because it might take until economic data to really push price around. Until then, I do nothing. But with that chart program, it'll keep you from sitting at the charts, wasting endless hours where there really isn't a trading opportunity, because we're going to focus in on this HL30. Another reason for you to focus in on the HL30 is you said you wanted something that you can use a 20 pip stop loss. Every time I trade the HL30 on the majors, and the majors I consider the euro dollar, the pound dollar, the dollar Swiss, and the dollar yen. Whenever I trade the HL30 on any one of those four currency pairs, I always use a 20 pip stop and a 20 pip target. That's it. And I've never changed it. I don't customize it just because a coaching student says they want to use a trading system with only 20 pips. It really truly has always been just 20 pips. I've always used a 20 pip stop. And I calculated it, I measured it, I tested it to make sure that the 20 pips was going to keep me into the trades, even with some pullbacks. Now, the thing to be aware of is that when price does reach that 10 pip range to qualify for the first part one or step one of the HL30, the CCI is the only indicator that I use. There's a specific setting and for this time frame for the CCI, and there cannot be any divergence. So on these first two candles, there was some divergence, and I had to wait until the next group here of these two white candles right here where my cursor is. So my entry was on the close of that candle at 1.0645. And the CCI has to be printing a higher reading than the CCI low of the previous day, right here. So that's the confirmation. So once it fits or fills within the 10 pip range, I'm alerted, and then I can come to my charts and look for the actual reversal candle pattern, and then wait for the candle pattern to close, and then get me in the trade. Now, we use a 20 pip stop and a 20 pip target. I executed all these trades with my coaching students this morning. This was actually one of the first ones that we executed at the start of the new day. So 45 was my entry, 0645 was my entry. Obviously, 25 is going to be my stop, and 65 is my target. So I'm going to move this out just a few candles so you can see what happened. There was a retest down here of this support level. And that's not uncommon. It's to be expected. I mean, it is support. It might take a little bit of while. It might take a little while. It might take a little more momentum and more traders to help us make that decision here. The price is bouncing off of that support level. But here's my stop here at 25. Price only went as low as 30 on these two candles here before picking back up on momentum, the momentum to the upside. Now, I don't like to see the pullbacks any more than anybody else does. But I do know that if this trade fails, I just need to look for the next HL30 and execute there, and I'm going to earn the loss back. And that if I do it correctly and I minimize or reduce the possibility of executing an HL30 when I know I shouldn't be, as I told you, there's 3 different methods that I use to calculate whether or not you should be passing on an HL30. If I pass on the HL30s that are more risky, then most of the HL30s I take are going to be winning trades. And experiencing one where everything lines up correctly, it's not impossible that it might fail. It is a possibility. So again, knowing that I'm going to do the right thing every time and just continue to look for it, it's really mechanical. I'm going to earn that loss back and still close the week with profits. I had one coaching student, and in the first week of me working with him one-on-one like this, he used the four majors. So we set up his chart. So he was looking at the euro dollar, pound dollar, dollar Swiss, and dollar yen. He didn't look at any other currency pairs. Looked at the 30-minute time frame, traded it with me. He had 26 trades in 1 week. Only 3 of them failed. All the rest of them were winning trades, and he was trading standard lots, earning $10 a pip. It was a lot of money. I mean, I think he cleared over $2,600 in that first week alone, just from looking at for the HL30, not trading any of the other breakout techniques or anything else. He told me he didn't want to do that, so I focused in on just the HL30s with him. Every HL30 I executed, he executed, and he ended up clearing over $2,600. So it really is obviously relative to the amount of capital that you have in your account. So let's continue with this one and show you how this one turned out. It takes, again, a little while. Sometimes they move a lot faster. There are days when it'll take off and maybe 2, 3 30-minute candles and it'll reach that target. Every day is a little bit different. It really depends. So again, 45 is our target, and 45 is our entry, 65 is our target here. Now, there is a way that you can maximize the profitability on a trade like this. It doesn't happen every day or every HL30, but very often enough it happens where you could prepare for this opportunity. And what I do, I personally will execute 2 lots. You don't have to. You can see how profitable this is. The 180 pips that we earned was just trading the HL30 to the first target, but there actually is a second target with this technique. And what I do is I execute 2 lots when I open my trade. I use the same 20 pip stop. So if it fails and I have 2 lots, I'm really effectively going to lose 40 pips. But again, if I do it correctly, it's going to be a winning trade and I'm going to get these results. I'll show you how it works. So on the first lot, I closed the first lot at the first target, earning effectively 20 pips. Now, I'm not including the spread. Obviously, everybody's going to be using a different spread. It really depends. That's another thing I'm going to work with you, is to make sure that you're getting a really good broker that's offering you a really good spread. Keeping those spreads tight and fixed, or relatively fixed, is going to help you increase, obviously, your profitability. So approximately 20 pips is earned here on that first lot. At that point, when it reaches that first target, I close the first lot, and then I set the second open remaining lot at a break-even stop. So I protect the lot, the profits from the first lot. So if price doesn't go any further on the second lot, and it comes back down to about, let's say, 47, when my entry was 45, then it would stop me out on the second lot at 0. I'd earn 0 at nothing, but I would still earn the 20 pip profit from the first lot. But if it continues like it did today, I just look for an additional 20 pips beyond the first target. So here I closed my final lot here at 1.0685. Effectively, on that second lot, when it hit that final target there at 85, I earned 40 pips because my entry was at 45. So the second lot just continued to ride all the way to that target. So effectively, 40 pips on the second lot, 20 pips on the first lot. That's approximately 60 pips that I personally earned on this. So do a lot of my coaching students. Once they get the hang of this and they're comfortable with it and they have sufficient capital, they'll start executing these trades with at least 2 lots on every position. Now, it's not every day that we get a trade both buying off of support and then selling off of resistance in the same day. You'll notice that what I did here was traded the HL30 off of support within that 10 pip range off of the previous day's low. But here's the previous day's high. So when it moved up here and it didn't go any further, I knew it wasn't going to be one of those continuation breakout trades, so I was looking for the possibility of a reversal. Now, this was not the very next trade that I took. This was just later in the day. I'll show you the other trades that I took that were, in other words, these aren't in order. But this is still the same pair, the euro dollar. And this doesn't happen every day, but it happens often enough to prepare for it as well. So here, when it spiked through, my high here was at 90, 0690. So it has to come up to at least 80, which it did, but it cannot exceed 10 pips above the previous day's high, which would have brought it right up here to the 00 number. And it didn't go beyond that. So it still qualifies for the 10 pip range. So I just needed to wait for the reversal signal candle. Now this was a little more tricky. It wasn't really an engulfing candle, and I was looking for something that looked like an evening star pattern. This one closed more than 50% of the length of that bullish candle, but I had to wait for the second candle because on that candle there, the CCI wasn't giving me solid confirmation. There was still a little bit of divergence. compared to the previous day's high CCI reading over here. That's what I was using. I need to make sure that there's no divergence in that CCI. It's quick, it's easy. It might seem like a lot at first, but I'm going to be doing this with you. I'll be assessing these with you, calling these out. You'll be using your microphone. I'll be telling you when I'm getting in, and I'll say this is exactly what we want here. So this one gave me an entry here. I'll move this over at 73 on the close of that candle. This one took a little while longer. And again, 20 pip stop, 20 pip target. You can use one lot or two lots. Again, if you used one lot, you would have picked up 20 pips to the upside here, trading it on the first HL30. And then here, 73, the first target was 53. So you would have earned another 20 pips here. And then this actually continued again for another 20 pips. You'll notice that if you would have used two lots, it spiked down here. The final target was there at 23. It did go down to approximately on this one here. Let's see where it went to. It went as low as 22. And then on the spike after FOMC, it went as low as 20. So it worked out perfectly. It was still, we're able to get out of the trade before FOMC. I prefer to get out before FOMC. I would have closed this even with 18 or 17 pips before FOMC, but it was okay to let that one run just a little bit further. Really, really close though, and sometimes they don't get that close. Sometimes obviously they'll move a little bit lower, giving us a clear opportunity to make sure that we're out of the trade. So this one earned we earned a total of, if you just use one lot, 40 pips, or 120 pips if you use two lots. 120 pips on just this currency pair alone. So you could have earned 120 pips using two lots on every trade and doing nothing else and looking for nothing else, just waiting for the opportunity. Now this doesn't set up like this every day. I don't always get to buy an HL30 off of support and then sell it in the same day, but it does happen pretty often. The other trade that we executed, the HL30, was here on the dollar Swiss. This was a sell opportunity. So let me go, this is a live candle here. Let me detach that and take you to what we did here. So here's the previous day's high. Here's the 5 p.m. Rollover. And this one, you'll notice, was a little bit different. I had to wait for it to approach that 10 pip range. And then here is my reversal signal candle right here, where my cursor is. And the CCI is printing a lower reading on the closed candle there than the previous day's high CCI reading. So this gave me an entry of 1.0165. Now for the rest of these examples, I'm just going to show you the first target. I personally trade them to the second targets, and sometimes they don't always reach the second target. I'm going to show you what happened with this one. But this one at 65, with an entry at 65, obviously the stop's going to be 20 pips above, which didn't come into, we didn't have to worry about it at all. It pretty much held below resistance. But 45 was the actual first target, earning 20 pips. But if you put a second lot on it, the second target would have been 25, and you'll notice it didn't hit 25. It only went as low as 27. And then it pulled back up. Our entry here was at 65. This is what happened later on in the day. So the second lot closed out at 0, but we still earned 20 pips. Sometimes that happens. And when it does happen, it will most likely happen on the dollar Swiss. If I trade two lots, I can get an HL30 and trade two lots to the second targets on the euro dollar and the pound dollar in most cases. And then the dollar Swiss will generally just reach the first target. But it does reach the second target in many cases. It's just that if it doesn't, it's going to most likely be the dollar Swiss. So this earned 20 pips. The next trade after that was, and I want to show you this one, not so much that you have to prepare for trading it, but I want to show you that it is capable, you are capable, it is possible to trade this one as well. This one is the euro yen. So here's the 5 p.m. rollover. Now on the euro yen and on the pound yen, it's a different stop and a different target. It's a 40 pip stop and a 40 pip target. And the reason is because those yen crosses can move much further than the majors. You do not have to trade those. I personally trade them, and most of my coaching students, when they get really comfortable with the HL30 and they're using it on the majors, they'll eventually move and look to start looking for the HL30 on the crosses. I don't trade the crosses as often as I do the majors. I like trading the majors. I like trading the simple ones. I'm not looking for currency pairs that very few people are trading. I don't want to do that. I tried that and it's too choppy. I'm just looking for I want to be on the right side that everybody else is trading. Well, I want to be trading when everybody else is trading. I want to be looking at the same thing everybody else is looking at. I want it to be obvious. The obvious signals and the obvious bounces off of support and resistance, those are the ones that I worry less about, and they're more likely to work and in my favor because I'm trading in the same direction that everybody else is and everybody else sees the same thing. That is a reality, and that's what I want to do. So just to give you an idea, I did trade this with my coaching students today, just to show you how the setup works. So we've got the low down here at 131.19. I'm going to take you to the actual signal. This actually moved through support. So if the low down here is at 19, that means it cannot go beyond 10 pips below the low. So 19.9 would have been the extreme low point here, which was right here. And that candle went as low as 11. So it's still qualified for an HL30 within that 10 pip range. I'll explain what that means when we actually start doing it, but it's still qualified. And then in the same candle, when it spiked down, it pulled up and gave me an engulfing candle right here with, at the same time, an entry, and the CCI confirmed. It was printing a higher reading on that closed candle than the previous day's low CCI reading. That's exactly how the HL30 works on this one. And then at this point, it's a 20 pip target and a 20 pip stop. Now again, in the beginning, you won't be using and trading the euro yen or the pound yen because again, it's a 40 pip stop and a 40 pip target. And if you try to use a 20 pip stop on this one, you'll get stopped out more often. And even though it might eventually go to its 40 pip target. So you don't want to do that. You want to use the right stop loss for the right technique on the right chart and the right time frame in the right trading environment. Remember, we're trading after the rollover. We're not expecting big breakouts yet. We're just trading off of the previous day's high and low. So we have to have our expectations in line. That's one of the things that I kept focusing in on, is that I couldn't expect big moves until it broke out above or below key support and resistance levels. And with this HL30, all it's doing is bouncing off of those levels. It's not breaking beyond those levels. So by knowing that, I can only trade to certain levels. I can't expect big numbers on these trades. So this one pays approximately 40 pips. So right there is where it finally hit my target. My entry was at 21. My target here was at 61. That's a 40 pip trade here. So we earned 40 pips there. We did not put 2 lots on this trade. I generally do not put 2 lots on the euro yen or the pound yen if I'm going to trade it. The next trade after that was on the pound yen. Remember, these are not exactly in order. I just want to show you the pound. The pound yen, again, another 40 pip target and 40 pip stop loss. I'll quickly review that. There's the rollover. It did approach the 10 pip range here, and I waited for the third red candle there, which is a bearish candle. That gave me my confirmation. That was my signal, my reversal signal. CCI confirmed as well, no divergence. The entry here was at 187.74. Using a 40 pip target. I'm sorry. And I had that marker in the wrong place. 34 was the final target down here, and this is where it spiked down. Now, I don't like holding onto these trades longer. In other words, if you're going to use a 20 pip, this earned 20 pips, I'm sorry, 40 pips. If you're going to use a 20 pip stop and a 20 pip target, let's go back to the euro dollar, for example. And remember how the first HL30, it hit the first target and then the second target. If you're going to use one lot and you are going to use the 20 pip stop and the 20 pip target, I always recommend closing at the first target, even though it might be tempting and you might see afterwards that it reaches the second target. Use that as a way to motivate you so that when you have sufficient capital and you're comfortable with putting 2 lots on the trade and risking 40 pips if it fails, when you're comfortable, then go ahead and trade it for the second target. But you have to lock in your profits here at the first target. If you're trading one lot, every once in a while somebody will say, Joseph, do you think I can hold for the second target? Does it look like it's going to reach it? Some days it does look like it's going to reach it. I can kind of tell, if there's sufficient room, if resistance is up there, if there's enough pressure, the reaction maybe after news, things like that. But I can't always determine that. So that's why I always recommend lock in the profits, do what you're supposed to, and just repeat the same process over and over again. That's how you're going to make money consistently. Eventually, you'll get to the point where you will be able to participate in the rest of this. Don't, use that as a way to frustrate yourself and then start holding on a little bit too long or thinking it's going to reach that second target, earning you a total of 60 pips all the way there on the first one, because it might not. It might fall short, and it might only reach the first one, just like I showed you here with the dollar Swiss. The dollar Swiss, It only hit the first target, almost hit the second, but it didn't hit the second target. So if you held too long, it might have ended up in a totally failed trade. So it would have been a winning trade that turned into a losing trade. You don't want to do that. There was another trade. I think I covered it. Oh, the other trade here was on the pound dollar. This was one of the last trades that we did execute, and for most of the trading session, I didn't do anything with the pound dollar. I just more or less just waited. I kept my eye on it. You'll notice that after the rollover, it didn't really approach the 10 pip range for the previous day's high or low. It just bounced around. There was some activity in here. I didn't participate in that. A lot of this here, the movement, I feel that it's too risky. I've tried trading certain candle patterns, maybe looking for a little reversal or engulfing candle, and I've done things like that in the past where it looked like it was a setup and it looked like it might work, and then it'll reverse and come back up and then test resistance, and I'll get stopped out. And it's hard if you don't have a fixed stop and a fixed target. You need a specific, precise entry with a precise target and stop loss every single time you execute that technique, so that you know what you need to do all of the time. And this strategy, by the way, I've been using it for years. It works in every market condition, even after non-farm payroll. There's times when non-farm payroll price will be moving inside of the overall previous day's trading range, and then the reaction after non-farm payroll, it'll push it up to the previous day's high, and then give me a reversal, and then I'll trade it. And that'll be the only trade I have on that particular currency pair for the day. And that's it. And I'm okay with that. I'd rather close with 20 pips profit, let's say on the euro dollar, because that was the only signal I got, even though I started trading during the London session. I don't care how many hours it takes, as long as I do the right thing. That's my key. That's my focus. It's always about trying to do the right thing. So it's my behavior. I know the system will work. I know that the technique works. I just need to make sure that I execute correctly. Not only from the entry, but I need to make sure that I'm holding on for as long as I'm supposed to. I don't want to close out too soon or anything like that. I mean, every once in a while, it might be like 1 pip too soon. And it just might be with a little bit of slippage if the broker's doing something and there's some news or something. But you get my point. I really want to make sure that I'm holding and doing what I'm supposed to. So I grade my trades. We will grade our trades together and make sure that our performance is what we're really focusing on, because the system works. So again, with the pound dollar, this type of activity, it's just not as reliable to me. Every once in a while, I can see something. Maybe it might be a technique where I could fade the double zero if it makes sense or something like that, or if it's a solid support level that I can see on a larger time frame. But if it doesn't look very clear, I just leave it alone. And I know that eventually it's going to move to a level, one of these two levels or somewhere. All that activity, it's going to, even though I don't participate in it, it's going to eventually move to a level where the reaction then will be more easy to calculate, and it'll be obvious, because I know what everybody else is doing at that point. It's either going to break out of this range or it's going to bounce off of support and resistance. One of the two is going to happen. Or, of course, it could continue sideways, but I'm going to do nothing until then on certain currencies. So on certain currencies, when they're going sideways, I'll keep an eye on them. I'll set up some alarms. And that's the other thing with that program. That program, you can set it to also to notify you on the breakouts. Only on the breakouts when the candles close outside of that range. So that way you're not wasting your time when price is just more or less spiking through support resistance. It's a great program. It took me a long time to actually put in my trading system into that chart program. So here, it was just a matter of waiting until later in the day, after we got the reaction here where it tested the previous day's high. Now the previous day's high here on the pound dollar was 1.5238. That means it cannot exceed 48. This is at 49. I'm sorry about that. Right there is the high, the 10 pip high range. Now the spike high on that candle went to 48. So it still held and qualified as an HL30. At that point, all I needed to do was wait for the reversal. So here is my actual signal candle. That was, let me go ahead and put an arrow down here. That first candle right there engulfed the previous white candle. You'll notice how it closes just a little bit below that actual open on the white candle. That's my reversal signal candle. I know that sometimes the wick might confuse people, but it's the body of the candle that I'm looking at, not the wick. The other thing I need to make sure is that on the close of that signal candle, the CCI has to be printing a lower reading than the previous day's high CCI reading. and that's where I got my entry. It was actually printing a lower reading, and I was able to trade this and sell it at the close of that candle, which was 1.5229. So if my first target's 29, then my first, if my entry is at 29, my first target is at 9. So I'll go ahead and trade this out. Here is 9 right here. This one actually moved a little bit faster, and I closed this one before I closed that second euro dollar trade to the downside. The euro dollar took a little bit longer to actually start moving around, and the euro dollar started to move down as I was trading the dollar Swiss one more time to the upside, reaching that overall resistance level that we've been looking at for the past few weeks. I keep an eye on the daily charts and the 4-hour charts, and I've been telling all of my coaching students that we're going to continue to trade the dollar Swiss. I'll go ahead and go there now. The dollar Swiss to this resistance point, which was actually put in place here after the Swiss National Bank pulled that peg. I know a lot of people were afraid to trade the dollar Swiss. A lot of people lost a lot of money. A lot of companies went out of business. It was reported that even FXCM it had big positions and lost a lot of money, and they almost went out of business and bankrupt, and they secured a $325 million loan, I believe, just to keep and stay in business. But anyway, it's very common to see price return to the levels that it was at before the actual event. And that's what we've been trading over the past few weeks, was all of this to the upside, along with some of these breakout trades to the upside. This is the daily chart, by the way, on the dollar Swiss. But here's my focus. I just want to share with you that we'll be doing things like this. When we see things and it's obvious on the daily chart and the 4-hour chart, we'll be aware of what's going on. We want to be aware of the overall trend, the direction, and all of this really comes together to give us an opportunity to continue to trade and make the right trading decisions. So we earned 180 pips. They're obviously a little bit more if you were trading 2 lots the way I do to the second targets. I didn't incorporate the dollar Swiss move to the upside one more time, where I traded it up to approximately the 1.0190 level, which was my target. I did that on the 1-hour time frame. It was just a small trade. I believe it was about 17, 18 pips or so. Nothing big, but it was just another opportunity to just do it one more time and to trade again before I stopped for the afternoon. You can do this too. Honestly, you really can. It's a really simple system. There's one indicator. It's not confusing. The rules don't change. The system works. We set it up on the charts for you. You're just going to be looking at either 2 or 4 different currency pairs. We're going to reduce the leverage that you're using so that way you can participate in more opportunities. It's not every day or at all times where we have 3 or 4 open trades at the same time. Very often I'll get 1 trade at the beginning of the day, and it'll be open, and maybe I'll get a second trade, and that maybe I'll have 2 open positions. So we'll prepare for that. We'll reduce the leverage so that way you're comfortably trading just 1 lot, and we just want to be prepared for the fact that you might have 2 open trades at the same time, but it doesn't have to. You can certainly wait until the second trade or the first trade is closed before we open the second one, and we just continue to do this process over and over and over again. HL30, really, really easy. I'm going to be with you every single moment of the trading sessions from the London and New York session to make sure that you're trading the HL30 right when I do, 5 days a week. During the holidays, bank holidays, if it's a significant bank holiday, I generally will stay away from it. For example, if it's a U.S. bank holiday, it's obviously going to be slower during the U.S. trading session, but I will try to trade the London session. So we'll be doing things like that. But it really depends. It depends on the type of holiday and how much activity we could expect. So anyway, I appreciate your time. I appreciate your time listening to all of this. I know it's a lot of work, a lot of things to think about. This system, by the way, eventually I'll teach you how to use it so that you can trade futures. You can trade oil futures, you can trade gold futures, silver futures, index futures. I actually do trade futures. I continue to trade futures, and I use this same system. Little different parameters, little different structure there. Obviously, you're not going to be looking at 20 pip stops and things like that, but you make adjustments, and it's the same structure. It's the same technique. So you're going to be getting more trading opportunities in the future, where you're going to be looking at more than just the currencies. Every once in a while, the currency markets might just be moving sideways, but futures might be taken off. Gold might be taken off. Oil might be moving, and you're going to get an opportunity to use these techniques to trade those as well, so that you're pretty much almost always going to get an opportunity just about every single day. So again, 180 pips, it really depends on what that means to you. It's relative to your account balance and the lot sizing that you use. But 180 pips, We could do that probably 2, 3 times a week if the week is a really good week. If we have 1 or 2 losing trades, it's going to be maybe a 20 pip loss on these, and it might accumulate to be maybe 40 pips if we have 2 losing trades in a row. It is a possibility. I can't say that it would never happen, but you can see how quickly, just by waiting and looking for the opportunities, we can earn those losses back. Usually before the end of the day, you're going to have those losses earned back right away, and then you're starting, either the next trading session or the next day with a clean slate. I can't guarantee it always goes that way. It just depends on when the loss could occur, but it really is replaceable that quickly. Thank you again, and I look forward to chatting with you again. I'm going to give you some more information. I'm just waiting for some feedback, just to let me know what you think about the structure, and this would be your initial trading plan in the beginning.